students, welcome back to Appleby Academy's classes. So in this video, we are going to discuss about cash flow statement. Okay, so when you are discussing the module accounts and finance, this financial statement analysis is a very important topic where we are discussing a number of tools about this financial statement. And one of the important financial statement analysis, or one of the important tool which is used for the purpose of financial statement analysis, is cash flow statement. So in this video, we will discuss the previous year questions from the area of cash flow statement. So we'll start with the first question which got asked on June 2019. Cash flow analysis is an important financial tool for the management. Its chief advantages are, okay, so here you need to identify the basic or main advantages which is related to cash flow analysis. And here you need to identify a combination of answers. It includes helps in cash management, helps in external financial management, helps in internal financial management, discloses the movement of cash. So you need to identify combination of answers from this. Okay, so let's revise what is this cash flow statement and all. So what do you mean by this cash flow statement? See, cash flow statement is a statement which is actually showing the movement or the changes which is related to cash related to that particular company, or cash and cash equivalents items. Let's see, it's a financial statement that summarizes the amount of cash and cash equivalents entering and leaving company. So in simple term, you can say that it is saying about cash inflows and cash outflows. Okay, that is the same which we referred as which is leaving organization and that is going to enter to the organization. Okay, so we are finding, or we are just making an analysis which is related to cash and cash equivalents and how this particular item got which is got entering into that particular company or firm, and which is got leaving that particular company. Okay, how that is happening, or which all are the activities through which you are getting cash or you are paying cash, like a way. So when you're just considering about this cash flow statement, this is mainly evaluating the current cash position, or you can say that if you're analyzing about the cash position, it will give you a better idea related to liquidity position of that particular concern, right? And here this which can be used for making some better financial policies. When you just get a better idea about your cash position, it will be easy for you to make a better decision related to these all, right? So this also helps in taking loan from banks and other financial institutions, because this is a statement which shows your exact financial position. Like, financial position means it's about the sense in liquidity position. Okay, so this liquidity position is showing, or if your financial statement is showing a better health related to your liquidity position, it will be very that will be very easy for that particular bank or financial institution. They will surely provide you loan, which can be just based on this statement, cash flow statement. So that will give them a pure idea about your liquidity position. So that is very helpful when you are just going to apply for some loan or such purposes, and which also helps in short-term financial decision relating to liquidity. Okay, so that also helps to take some decision, which we already discussed earlier. Now we'll go through the benefits of cash flow statement. So coming to the major benefit of cash flow statement, firstly, it helps in knowing the exact figure of cash inflows and cash outflows from various operation of business activities. So here actually we are classifying the various activities from which there is a cash inflow and cash outflow. So we can analyze cash inflows and cash outflows from various sources very correctly or very accurately. You can predict such things, or you can actually analyze such things. So that is a very important feature, or one of the important advantage of this cash flow statement. And it also helps in preparing budget. Okay, that will also give you an idea, or it will also give you a basic requirement which is used for preparation of this particular cash budget. That is also one of the important advantage. Rather than that, it also reveals the key changes which is required for the financial positioning of business and prioritize important activities of management. As we already discussed that it is actually helping in making some better financial policies or better decision making. So this is also very useful. That means this cash flow statement is very useful, or it will give information about the concern, about various activities, or how you are getting cash from that particular activities, or how much you need to spend for such activities. All these will be which will be very clear for you through an analysis of cash flow statement. So that will give you an idea regards to how various financial policies to be developed. Okay, and it also helps in internal management of financial resources. So how to manage these resources? So it will actually give you an internal or internal assessment about the financial position, or financial resources, how you are utilizing, whether you are utilizing it optimally, and also that is a purpose, or that is very useful for internal financial management, right? So anyway, we'll come back to this particular question. So you need to identify the chief advantage. Helps in cash management. Of course, the main purpose of cash flow statement is to find about cash inflows and cash outflows. So it is actually helping you to manage your cash properly. So option A is correct. Then helps in external financial management. Does it helps in managing these financial resources externally? No. This is or this particular financial statement, this cash flow statement is helping you to make an internal financial management, not at all an external financial management. So you can eliminate option B, but option C is correct because it is saying about internal financial management. And finally, disclose of movement of cash. Yes, it is saying about how much cash inflows are there or how much cash outflows are there. So you can actually exclude option B rather than all options should be there. That is option A, C, D. Yes, so correct answer for this question is option A, C and D only, right? Okay, now we'll move to another question which got asked in September 2020. So you can say that this particular question is from cash flow statement, or you can consider this as a general question which is related to this accounts and finance. Okay, anyway, we'll start with the question. Which of the following statements are included in financial statement? So you need to identify the statements which can be considered under the head of financial statements. Cash flow statement, fund flow statement, balance sheet, statement of changes in equity, income statement. So we already discussed about fund flow statement and all in previous videos, and then you need to identify which all items or which all statements can be included in the head of financial statement, and here also you need to identify a combination of answer from this particular question. So as per Indian accounting standard, it is very important that you should know what all items are actually included in the financial statement, or which all are the statement that can be included under the head of financial statement. So as per Indian accounting standards, see that it includes balance sheet, income statement. Okay, rather than that, you can also include statement of changes in equity, cash flow statement and explanatory notes. Okay, that means which you are not able to show in your financial statement, you can just show them as explanatory notes also. Okay, so these all are the statements or the notes that should be considered, or that should be considered as a component of a financial statement. Okay, it's a very important point. Balance sheet, income statement, statement of changes in equity, cash flow statement and an explanatory note. So that was a direct question, and just see that option A, cash flow should be there. Fund flow, which is an optional statement which we know that the firm is preparing, and here we know that we are not following any standards, and also that is optional. So which is not an important or compulsory statement to be prepared. So you can eliminate option B, C should be there, D should be there and E should be there. So except B, all options should be there, that is A, C, D, E. Okay, so correct answer for this question is option B. Moving to the last question which got asked you June 2021. So in this question, it is about both fund flow and cash flow statement. Fund flow and cash flow statements are important managerial tools and helps the firm to know. So we know that this both fund flow and cash flow statement are financial statement tools which we are using for having an analysis related to the financial statement. And what all are the things, or what all are the functions that will be performed by both these statements, whether it shows about anything about liquidity position, capital expenditure incurred, dividend paid, and extent of external financing. Okay, so in order to answer this question, it is important that you should have an idea related to both cash flow statement and fund flow statement. As we already discussed about cash flow statement, here we know that we are actually considering cash outflows and cash inflows, right? So we are actually preparing this cash flow statement by following. If you are following accounting standard, you need to follow accounting standard 3 for this preparation of cash flow statement. And here we are actually considering mainly about 3 activities. So we are just classifying the activities that is going to happen in organization under 3 heads, and based on this we are identifying the cash flows and outflows from each of these activities. Okay, so which all are the activities that we are considering in case of this cash flow statement? It includes operating activity, investing activity, and financing activity. Okay, so these all are the 3 categories or 3 basic activities based on which we identify cash inflows and cash outflows related to each of these activities. Okay, and when you're just coming to this operating activity, see, this is the activity which shows about the, or which is the major source of revenue for that particular concern. That means if a particular company which is selling their products, we know that is a major source of income for that particular company. So this is the one which is coming under the head of operating activity, and you can see that the major cash flows and cash outflows which is related to this operating activity includes, if it is about receipts, you can say that it is the receipt that they are getting from sale of goods or rendering services. So as we know that it's a situation of cash inflow, right? By selling their products, the company is going to earn, right? So there is cash receipt or cash inflow, and they will also receive cash inflows or cash receipts from royalties, fees, some other commissions and other revenue. Okay, so these 2 are the major cash inflows from operating activity. And if you are saying about cash outflows, which all are the ways you are going to or your money is going to leave from your company, which can be, as we know that for purchasing raw material, you need to pay for your suppliers, right? So here cash is leaving from your company. Okay, so that is about cash payment, and also cash payment to and on behalf of employees. For employees also you need to pay. So that is also a situation of a cash outflow. So when you're just studying about these activities, it is important that you should be able to identify which all are the cash inflows and cash outflows from various sources. Like a way that they can just give you an example, cash payment to supplier for goods and services. So you need to identify this particular activity can be connected with which activity. Okay, whether this investing, financing, or operating. So like a way such questions can be asked. So you need to identify operating activity includes these items. Okay, which all are the cash inflows and cash outflows from operating activity. Okay. is relating to investing activity, which is one of the another important activity which can be included while preparing cash flow statement. Here we are mainly discussing about if you are purchasing a particular asset or if you are selling your particular asset, this can be included under the head of investing activity. Okay, and just see some another point that negative cash flow from investing activity might not be a bad sign if management is investing in the long-term health of the company. So here it is specified that if you are just purchasing some assets, as we know that we need to spend huge amount for that. Okay, we know that it's a capital expenditure, right? If you're purchasing an asset, it's a capital expenditure. Okay, so when you are spending a huge amount for purchasing that particular asset, as we know that you are going to get benefit from this particular asset in future years. So maybe when you are considering the cash outflows in case of investing activity, that will be a huge figure. Sometimes it can be a negative figure also, but there is no need to consider it as a negative sign, because that will give you benefit in future years. Okay, not for this current year, but for future years, you will receive benefits from the same. Okay, and when you're just considering the activities or the things which is actually included in investing activity, if you are paying for purchasing a fixed asset, that is cash outflow. Then if you are selling your fixed asset, you will receive cash, right? So there is a cash inflow. And if you are making cash, or if there is a cash outflow related to acquire shares, debentures and other debt instrument of other enterprise. So if you are going to purchase shares or debentures of another company, okay, you are going to purchase shares and debentures of another company, that's a situation of cash outflow, right? And cash receipt from on account of interest and dividend on investment. So this is actually a connection which is related to this third point. So if you are purchasing debentures of another company, you will receive interest. Okay, so that is a cash inflow. And if you just purchased an equity share of another company, you will receive dividend, right? So that is also a cash receipt, right? And moving to the last category, which is financing activity. So here it is actually about the capital structure of company. So that is mainly we will discuss under this particular head. Okay, so it will actually include this cash inflows and outflows. And if you're discussing about cash inflows or cash receipts, when you are issuing shares, when you are issuing debentures, when you are raising loan, in all these cases, you are getting cash or cash inflow is actually happening, right? So that's a situation of, or all these can be included under the head of financing activity. And if you are redeeming your shares or debentures, or if you're repaying your loan, all these will result in cash outflow, because in all these situations, your cash is, you're just paying the cash, right? So there is a cash outflow. So if you are buybacking your share, redemption of share, redemption of debenture, repayment of loan, and if you are paying dividend to your shareholders, okay, and if you are paying interest on debentures and loans, in all these situations, there is a cash outflow, and we will include all these under the head of a financing activity. Okay, so this is the major activity, that is, these are the major activities that got included in cash flow statement. And also you need to identify which all are the items that can be considered under each of these heads. Okay, so now we have an overall idea about this cash flow statement. Now it is important that you should have an idea about fund flow statement also, then only you can answer the question accurately. So this fund flow statement is actually showing or actually making an analysis which is related to the changes in the financial position, because here we are making an analysis between the two financial statement, and based on that we are identifying the changes which got happened to the financial position of that particular concern, right? So as we know that fund flow statement is not compulsory, or its preparation is not at all compulsory, it's optional, and here we have no such a standard to follow like that of a cash flow statement. When you are coming to the preparation of this fund flow statement, it mainly includes, or this fund flow analysis actually includes two parts. One is about the preparation of schedule of changes in working capital. Another one is fund flow statement. That means here we will just consider the sources and application of fund. Okay, so the schedule of changes in working capital means it is analyzing about the changes that got happened to current asset and current liability. Okay, whether current asset got increased or current liability got increased, or whether that got decreased. Such analysis is actually made in case of schedule of changes in working capital. While when you're just coming to the sources and application of fund, here we are identifying which all are the sources, or from where, from which all sources you got received funds, on which to which all situations, or where all you got used your fund. These all are the two things which you are considering in case of this fund flow statement. Okay, so that is a basic classification, sources and application. And it is important that you should be able to identify various sources and application in case of a fund flow statement. Sources means if you are issuing share capital, that means if your company is raising share capital, we know that you are going to receive fund, right? You will get amount from the shareholders, and if you are issuing debentures, you will receive amount from debenture holders. If you are raising a loan, you will receive fund from that particular financial institution. So these shows your sources. Okay, so issue of share capital, issue of debentures, raising long-term loans. If you are selling your fixed asset, again you are getting fund, sale of investment, fund from operation, decreases in working capital, interest and dividend received. All these are sources, and the opposite thing will be considered as application. Issue of share capital is a source. So of course, if you are redeeming your share, that is an application. Then redemption of debentures, repayment of loan, purchase of fixed asset, purchase of an investment, fund lost in operation, increase in working capital, payment of dividend and tax. So it is important that you need to or you should have an idea about the classification regards to sources and application. Okay, like they can just give you some example like sale of investment, whether it's, you need to identify that whether this is a source or application. That is also important. Okay, now you'll have an overall idea about the preparation of both fund flow and cash flow statement. Now it is easy for you to answer this particular question. Let's see. Fund flow and cash flow statement are important managerial tool and help the firm to know liquidity position. Does it shows anything about liquidity position? Of course, that will give you an idea about the position of cash. So that is giving you idea related to liquidity position, right? So option A is correct. And capital expenditure incurred. Yes, we know that here we are considering how much amount that you used for purchasing a particular fixed asset, and in both these cases, in case of cash flow and fund flow, we are actually considering it in case of fund flow statement. And in case of cash flow statement also, we are actually including it under the head of investing activity, right? So capital expenditure incurred is also included. Dividend paid is also very important, right? Dividend paid is actually coming under, in case of cash flow statement, it is coming under financing activity. And if it is about fund flow statement, we know that it is one of the application, right? Application of fund. So that is also correct. And extent of external financing, that means how much fund you are rising externally. That is also we are discussing, right? In case of cash flow statement, we are actually discussing it in under the head of financing activity. And in case of fund flow statement also, we are actually identifying how much amount you are getting through debentures, loans, then equity shares and all, right? So here also we are considering the amount, or how much amount, or the amount through which, how you got raised your fund through external sources. So we are considering all these elements, or we will get an idea about all these factors, right? So it includes all these options. Whether there is any option that include all these options, yes, A, B, C and D. So correct answer for this question is option C. So in this video, we discussed the major questions which is related to cash flow statement. And while you're preparing for this cash flow statement, it is important that you need to have an idea about the various activities that got included in cash flow statement, and you need to identify the various activities and also the items which got included in each of these activities. Okay, as we already discussed a question from fund flow, which is related to both this cash flow and fund flow, here also we'll get an idea about fund flow statement also. So this topic is very important, and when you're just considering, you are getting questions from this cash flow statement and fund flow statement simultaneously for the exam. So do prepare well for the exam. Thank you and happy learning.